In this week's video, we're going to be talking about this simple tool that you can start using from today to increase profits in the market. Now, I'm talking about the use of the Fibonacci tool and understanding the premium versus discount pricing levels. So what you're going to use is the Fibonacci tool, marking from the 0% to the 100% and the 50% mark. Now, quickly showing you how I've done this. I've used the 0, 1 and 0.5 settings. This is the EQ level, which is also known as the 50% level. Anything below the 50% to 0 is classed as our discount pricing area. And anything above 50% to 100% is classed as premium pricing area. So how is this going to help you in your trading? Well, if this is classed as our trading range to the downside, we're going to take this as a sell example. This is our trading range to the downside. Our discount level is going to be up to the 50% area, to the EQ level. If we have anything pulling back inside this area, we're not going to look to sell this market. We want to see price going through the EQ level above that 50% into our premium pricing area. This is where we want to be looking for a sell back to the downside. This simple method to use in your trading is going to help you to find more winning trades and less losing trades. Yes, you're going to find sometimes price will come out of a discount area, but that trend is normally on a really strong downtrend or uptrend in the market. These are not the types of trades you want to be taking with the use of a supply and demand trader or even smart money concepts. What you need to be doing is using that premium pricing area to look to take your trades. So let's go over this BTC US dollar chart and we'll go through and I'll demonstrate to you how you can apply this into your trading right now. So let's just remove these off the chart. Let's head over to a daily time frame. Now, and let's have a look at current price. So current price, let's have a look where we can see our first trading range. So understanding a trading range, this move from this high to this low is our trading range on this daily time frame. Okay, so this is our current trading range to the downside. So if we are to look for any sell trades on this move down, where do we need to be looking for a sell? Now, if you just said that premium pricing area, then you are spot on. So we've been marking out using that Fibonacci tool from the high to the low of that current trading range. Now, it's not quite perfect, but it's near enough there. Anything below this 50% area, remember, is our discount pricing area. We do not want to be taking a sell. So we're not going to look at taking a sell at this area on the chart or even this area here. These areas on the chart are not going to be the areas we want to be taking a sell at. And this is where we may see price falling away, but eventually it comes back up and takes those highs, and that's where your stop loss would be. We want to see the entry, so when we come on that entry, we see the market falling away. So how do we use this to our advantage? We do not take any trades here at all until we see price coming above this area of the 50%. Now I want to see price closing through that 50% as well, coming above. Now for me, we're also going to want to see price coming into an area of supply or into an area of imbalance. And that comes into the use of understanding both a supply and demand trading strategy and a smart money trading strategy. So our last area of supply sits here in the market. This is our current supply where we see the push down from this high of the move. This is our origin of the move to the downside. Now again, we do have a drop-based drop area of supply sitting here in the market where price does come off and we do see it fall away. But then eventually it comes back to remove that zone. Now why? Because it sits below that EQ level. We're inside that discount pricing zone. We want to be inside that premium zone, remember? So if this is our supply zone, we may see price want to go up here for a sell. If not, we'll be looking for that area of imbalance. Well, this is our first area of imbalance we can mark out, which sits above, okay, above the 50% area. We're not looking for anything below. This is the first candle pushes up above and closes that 50% area into this area of imbalance. So if we're looking at this now for potential sell, you can see we have a manipulation of those highs. We push down. Okay, so that would have been perhaps a potential sell we could have caught on a lower time frame. Now, I'm not saying that this one has worked out, because it hasn't, and price has pushed up higher, and eventually we make this manipulation and price has fallen away. So why did that happen? Well, again, just like we see on this Fibonacci pullback to that EQ level, what do we have on this imbalance zone? We also have the EQ, which is at 50% mark. Where did the price go to? The 50% level before we saw the drop away. So always keep in mind that that EQ level with that premium and that discount pricing area also comes in line with the imbalance zone as well. And that's where we see a great trade here with manipulation to upside, and we see the market falling away. Now you can also draw out this high that was also manipulated, and then we saw the drop away. Now here you can go down to a lower time frame. We can look for that reversal, understanding the change of character. Now if you haven't seen the change of character videos, I'll leave that video linked above now for you to go watch after this video. But this is to help you to understand where we are at that premium and that discount pricing. Remember, above this 50% area is where we want to be capturing our trades, and that's where price does go into, understanding that on this area of imbalance. So there's a potential area to downside. Now, understanding this is our current range back up, let's remove all these levels. You can see that this may be our area we're looking for a sell from, so mark that off. But we also now have a trading range. Once price breaks this structure, mark this out at the break of structure level. Once we break through this high, now for me it's a bullish closed candle breaking structure is fine, or you can mark it out to this level and we can see this is a solid breakout. So if you want to be more conservative, you can wait for this breakout here. But also what we can identify is that the market at this point makes a higher low, breaks this high, makes a higher high. For me, this is then a pullback which makes a new higher low where you can start looking for a trade. Okay, then we make a new higher high, and then a higher low, and a higher high, a higher low, and a higher high. Now it's not until here we break that cycle and we break structure to the downside. Typical reading of market structure, understanding where price is going. Just remove all those quickly. Now here we drop down to, let's say, a 4-hour time frame. This will be easier to see. This is our first area we see a close through structure. There is that break of structure and that close through. To this point, we already know that we want to see price going above this level before we can even look for a sell. So we can now start using this as our trading range from low to high of that move after we broke structure. Price then comes back to where our premium area. We're looking for price to come back below that EQ level. This is our discount area now. This is our premium area. Price pulls into here. We're looking for that trade. So what we're looking for at that area, we're looking for that area of imbalance or that area of demand. So our area of demand, this area we'll be marking out is this candlestick. And that's where price in fact goes straight into that demand zone. And the only area of imbalance we would draw is this level here. Okay, and then there is an area of imbalance above. I'll just show you exactly how to read the market here. When the market comes in and bounces off this imbalance, do we have a break of structure above here? We do not. We have a close through that imbalance. So once we see that close through, we know price is going to go for the next area. And as it does, into the next area and into this area of demand. This you can look at taking an entry based on a set and forget strategy, also shown and taught in this channel how you can use that. I will leave that video linked above now as well for the set and forget strategy. Based on this area of demand, you'll then be looking at targeting these highs. So if you're taking that as a simple trade, enter here, stop the low of the zone, this will be your target. Now that is a simple 7-to-1 risk to reward. So we are still going with the 4-hour trend here, with the retracement back on that bigger range on that daily time frame, looking to target up to these era of the EQ level on that daily range. So there's a simple trade you could have caught. Now you can also use, to remove this level, it was removed. You can also look for a break of structure here. This is your break of structure. Now it's a false break, a wick down, so you may have been caught out. And then finally we have this break of structure here in the market. That leaves this area of demand here, where you could either look for a send and forget strategy on the break of structure, or go down to lower time frame and look for a confirmation entry or a change of character on the lower time frame. Now that is what I would probably do here. I would be using a change of character inside this area of demand to look for a trade to the upside. But you don't need to do that. Once you understand what is happening on the chart, when we come back to this area of demand, this is pulling back. Normally a premium area will pull back between a 50 to a 90% area. That is what you're looking for. Obviously, if it takes the low, then that trend is over. So there's your first entry. Now once we've seen this, we can then identify where our target was this previous high. What do we have? We have a break of structure once again. Now we do close through this 50% area here in the market. But remember, we went through on that daily area of imbalance. We want to go to that 50% area of that imbalance as well. So most probably we're going to see price want to take this high anyway before we can even look for a sell. So again, we can mark out with the trend. We have another trend upside. Now, before we go any further, inside these movements, same here as well. What do we have? We have micro trends. So on a 30-minute time frame, we have trends here where we have the ranges as well. So this is our previous range up. This is our new range up. But also inside here, you can identify we have this low to this high, our trading range. We have this low on the break of structure to this high is our trading range. Where does price come back to? That EQ level. Again here, we have this is our trading range. Price comes below the EQ into our premium era. We have an era of imbalance left behind here. We're going to take an entry here to the upside. See, so you can actually capture trades on the way up on these legs as well. So this is our current range on this 4-hour time frame. We're looking for price to come back below the EQ level into our premium era to look for a trade. So now we're going to start looking for reasons to take a trade here. First, we can see we have an area of demand here in the market below the EQ level. We also have another area of demand here as well, where price does go into. And if you look closely, we also have an area here of imbalance left below this low, which is an ideal area for price to want to push for that low, manipulate that low into that imbalance and fill it before we see the push higher. And that's exactly what did happen. So we removed this area of demand and we're into this imbalance inside this demand zone. Where the price go to the previous highs, where we want to be targeting this move back up to those previous highs. Once again, this is your trading range. And you can even see on the way down, okay, we have these pullbacks above the 50%. Next pullback down. Again, above that 50%. So every swing you see in the market, once you understand that trading range, using this simple tool is going to help you to find better winning trades. So if we was to take a trade here again off this zone of demand, stop at the low, target that previous high, marking that cross, we've got just over 11 to 1. Simple once you understand the use of this tool. So now we're actually above this level, and we're probably going to start not looking for any more sell trades now, waiting for that reversal change of character. We've caught a couple of great trades on the way up. We can wait to see if price does break that market structure. Now it does. Now we can still mark this out as our trading range. Okay, price does go below and goes up once more. So if you was to look for a trade, you need to be making sure you're below this level. So you're still in the discount area when you're looking to take that buy trade. We're still bullish on this trend at the moment. So where did price come back to? Again, it comes back to this area of imbalance. Okay, now price does not come, mark that off, does not come down to that 50% area of the imbalance. This time we just see a simple push in and a reversal. This is where you need to understand that change of character. And there is your break of structure, your change of character, leaving this area of demand. You can see price comes back in once, twice, 3 times. If you decide to take this as a trade, I would at least be looking for my first profit target to hit this EQ level and then look for the previous high market structure. Again, 3 to 1. But as I said, at this point, you got to start remembering that price is now coming above this EQ level on that bigger trading range, which if we just look back is this range here to downside. And we're going to start now looking for that reversal. So once price does come up here and break structure once again, all buys now for me are off the table, especially if we see a change of character. Now that change of character is going to happen on the break of this structure here. This is where we see the market come down, breaking through on this bearish candle. We come back, retest it from below, and we fall away. So that is reading the swings here on that time frame of the 4 hour. This is now your current 4 hour range. Price has not pulled back to it, so you can't take a trade there. And if we then went from the current range from here to here, we're now pulling back to that 50% area. And again, reading the market, if you was looking for a trade here, where would you look for price to come back to? Into this area of imbalance. Why? Because it sits in that premium area to take a sell. We're looking for price to come up into the 50% area of this area on this imbalance. So look for a reason to take a sell back to the previous lows. So that is what I'll be looking for to happen next on this current pair. Now on a daily time frame, we go back to the daily, we can see where price has made that reversal out of this area of imbalance. Again, came above that EQ level. This level here, we'll just take that away. If we now see price continue down, breaking this low, so we see the continuation downside. What are we seeing in here? We're seeing those smaller trends again, where we're looking at the 4 hour time frame. So this is our previous trading range, the upside. Now this would become our new trading range. So if price falls away and breaks the low, let's say price comes all the way down to here, that's then our new trading range on the daily time frame. And again, we'll be looking for price to pull back above that 50% area, above that EQ level into that premium pricing. Remember, we just went through it. You could have bought the trade up above that area. And again, now you'll be looking for the same thing. You'll be selling down until we see that reversal happening. Okay, and once we're below this low in the market, we don't want to be looking for any more sell trades. We want to be looking for that pullback. But all of this you'll learn in the video coming up in a moment, which is going through that daily directional bias that will help you to understand why we're not looking for any sell trades once we get below this low in the market, because it will teach you to stop being caught on the wrong side of the market once again, understanding that we're right down inside a discount area. Remember, we don't want to be selling in a discount area. So I hope you've enjoyed this video today. I hope it's given you some great value today in this video. If it has, give me that thumbs up. It lets me know you're enjoying this type of content. And leave a comment below if there's anything else you want to ask regarding the use of this Fibonacci tool with that EQ level into the premium pricing areas where we're looking to take those trades. But popping up right now is a video that goes through that directional daily bias. It's going to help you to understand this type of range trading with the use of the discount and premium levels, and how you can use the directional daily bias strategy to find winning profitable trades on the way back to that premium area.